Welcome back. In this video I will give you my thoughts around Tesla valuation and why I think that this is actually not a bubble currently. And what I'll do is I will use actually this chart to explain why. So I'm not talking about multiples like price to earnings, price to sales, which can fluctuate over time given depending, for example, on Fed policy, how we noticed quite recently. I rather want to see it in relation to one of the traditional auto manufacturers, namely here Volkswagen. And this is also an argument that I hear over time. Like, for example, look, Volkswagen is selling 8 million cars, right? And they have higher total revenues than Tesla, that's for sure. Why is Tesla worth multiple times of this company here? And that's actually not only a Tesla phenomenon, but also generally against EV stocks in particular. So now here, let's look at this example. What you see here are first metric over time, net income. Tesla, here the blue line compared to Volkswagen. So Volkswagen, what is it, jumping around here between roughly $5 billion US dollars to $8 billion US dollars. They haven't reported the Q4 numbers yet, so that's why this one is missing here. Versus Tesla, the blue line, coming off here, very low numbers, almost not break even here, around 200 million US dollars quarterly revenues and going up. Crossing for the first time in Q3 2022 Volkswagen's net income in a quarter, and now has reported 3.69 billion in the last quarter. So that's the first metric we want to have a look at. And the second one is actually net debt. Tesla compared to Volkswagen. As you can see, Tesla's debt is negative here, meaning it's actually, they have cash positively, even considering their debt. While for Volkswagen, that's quite the difference here. They have 160 billion euros in debt actually, and so they need to serve that debt. And of course, this might get more and more difficult in the future when they have to refinance, because of course the interest rates have been rising. But that's another topic. But anyways, what I want to outline here is that Tesla's incomes here, or cash flows, are actually right now already starting to exceed this traditional auto manufacturers on a quarterly basis, and if this trend continues, will actually do so on an annual basis. Maybe next year, maybe 2024, we'll see how hard this recession and the price cuts, for example, also take effect with Tesla here. But for Volkswagen, it's quite uncertain. Like, there's at least no growth. There are maybe rather flat here, and at the same time, having to deal with this debt, this might become an issue for Volkswagen at some point in time, which doesn't mean that Volkswagen can successfully or cannot successfully, I should say, make the transition to electric vehicles. I think they will. However, I think just having this comparison here, this shows why I think Wall Street, correctly so, gives a higher valuation, a multiple times higher valuation to Tesla, mainly because you see the estimations that Tesla is going to continue like this and grow their future cash flows and incomes here, while having no debt to repay, whereas this situation is quite difficult for most of the legacy auto manufacturers in comparison. And so I do think, frankly, but that's just my opinion, I'm a holder of Tesla stocks, so take this as a biased view, make your own decisions. I'm not saying this is financial advice, but in my point of view, this indicates that this is not a bubble here for Tesla stock. And of course, in the last couple of months, Tesla has also been re-rated in terms of a multiple compression when it comes to price-sales ratios, earnings ratios, and so on. Given, of course, the macroeconomic conditions of, first of all, fear of a potential global recession. Certainly there is recessionary environment in China, but On top of that, also the multiple compression, because interest rates have risen, and this means that a hurdle rate is higher. So your opportunity cost is either put it into something like a US T-bill that is yielding up to 4% or more, and otherwise you can also invest it in the stock market and find alternative returns, right? So this has gotten new by now, and so these fluctuations can occur. So I don't want to justify the PE ratio or the multiple here, but rather see it in relation to one of those traditional manufacturers. And here I can clearly see that Tesla has advantages, and in my point of view justifies a much higher valuation also going forward. What do you personally think about it? Let me know down in the comments. If you like this, please smash the like button, make sure to subscribe, hit the notification button so you get a notification whenever I post a new video, and then see you in the next video.